Welcome back to the channel Future CMAs. I hope you're doing great. So I know your exams are around the corner, a couple of months from here for your exams, exactly somewhere around 50-55 days from here for the exams. I hope your preparations are going on schedule, on plan, they're on track for the December 2025 attempt. Coming to this particular video, we actually this time have amendments. Unlike the previous attempts, we have actual amendments for December 2025. If you go to the ICMAI's website, you will find a supplementary document released for certain set of papers for December 2025, out of which our paper number 13 is a part of it, and paper number 5 also. CMA Inter students, be tuned to the channel. You will probably get this video of paper number 5 tomorrow or day after tomorrow. And do subscribe to the channel and hit that bell icon. You will be getting all the other amendments about CFR, taxation, or all the other subjects we have regarding supplementary audit, supplementary documents which are released. You will get all the documents are in preparation. So keep a check on the channel. You will get all these documents. I've already downloaded this document for you, the supplementary for paper number 13. If you come across this document, there are a lot of amendments that have happened through Companies Act, amendments in Insolvency Bankruptcy Code, amendments in SEBI regulations, amendments in competition law, amendments in banking sector, and amendments in MSME and PMLA. So I agree there are a lot of amendments, but if you observe the words given by ICMAI here, ICMAI has basically plucked the bare wordings of the notification and drafted it here. They have not made efforts to make it user friendly or student friendly for them to understand. Rather, they plucked whatever the notification was there and directly slumped it on our face. But one thing I can agree, ICMAI must be praised on this. These amendments are very recent in nature. They happened somewhere in the beginning of this year 2025, February, March, somewhere there, and they have been already implemented in our syllabus. This shows that ICMA is ready and a little proactive this time to introduce syllabus. Let's hope this continues in the future so that we are up to date with the market. So this is one thing that is ICMA has done good, but the problem is the drafting is not done correctly. There are the bare wordings given. You will not be able to understand the bare words, and there are also situations where this is not even part of a syllabus that gave it as an amendment. So let me make it clear for you. Let me make it easy for you. We have drafted this. I know the students, so I know you can't be reading that document on your own. So I have drafted this document which will provide you all the amendments in a point-wise basis, chapter-wise basis, subject-wise basis, and with a proper heading with all the keywords which are already highlighted. So it will make it easy for you to understand and read it and also retain it. All the keywords have been highlighted. This is basically our material for CMA Final, which we use it. I'll also share it in your groups. I'll leave this PDF as I'll leave this PDF in the description of this particular video. At the same point of time, I'm not expecting you guys to understand all the amendments that have happened. These amendments are very minute and very detailed in nature. Not all amendments are important, but nevertheless, they are amendments. We'll go through them. There can be an MCQ which can be drafted. But out of all the amendments, the last couple of amendments we have, one majorly on MSME. The limits of MSME has completely changed. Now, this can actually be a 7 marks question. If ICMAI is able to make the paper properly drafted, there can be a high chance that MSME limits can be asked as a 7 marks question. So a little more efforts on that particular topic. With that being said, let's get into the video. Share this video with your friends who are writing your CMA final exams in December 2025. Let this video reach and get benefit to as many students as possible. So coming to the Companies Act part, we have 3 amendments under Companies Act. Starting with, again, one more disclaimer before I start, I'll be explaining a lot of background so that you'll have knowledge of the law, so that you'll be able to better understand the amendment. It will take a little bit of time, maybe somewhere around 10 or 15 minutes, or is what I'm expecting for this amendments class to complete it. Maybe a little more from that, but I want your clarity on the topic. So I'll explain a little background so that you'll understand these topics in a better manner, rather than sticking to the words that are directly given here. Right? So coming to the GNL category. GNL is that part of the forms which are drafted by Companies Act where there is no other form drafted. So let me clarify this for you. Companies Act has a total of 29 different chapters. I hope these colors are visible for you. Companies Act has a total of 29 different chapters, and each chapter has been curated in such manner that they will tackle one particular problem: deposits, share capital, board meetings, key managerial personnel, board of directors. Each chapter, compromise arrangement, operation mismanagement, whatever the chapter might be, they tackle a specific set of problems, specific set of provisions. for that specific set of provisions, they've also created the filing procedures with the ROC and MCA called as forms. And to make it user friendly and to avoid confusions and deviations, they have made sure that they have drafted forms for a particular chapter. If you take in the incorporation chapter, we have forms called as INC, incorporation shortcut. If you have deposit chapter, we have DPT. Charges chapter, we have CHG. In case of board of directors, we have DIR. In case of accounts of company, we have AOC. So we have forms for different category of chapters. Similarly, every single chapter we have learned a lot of DIR forms in our syllabuses also. A lot of AOC forms we have learned, a lot of INC forms, DPT forms we have learned. A lot of forms are there for each chapter, but there are still some provisions of Companies Act which don't fall under any particular chapter. If they don't fall under any particular chapter and there are generalized provisions, for those generalized category, we create forms called as GNL. GNL, you got it right, it is a shortcut for general. General forms have been created. They are called as general purpose communication forms. So whenever it is not falling under a particular chapter or a particular form category, it will come under GNL forms. So what happens, sir? In case of GNL forms, the GNL 1 is already existing, but this GNL 1 has been revised. The new GNL form has been introduced, which has more detailed disclosures. It has reduced compliances by the fact that stamp duty is no more required. Stamp duty is not required, we don't have to get it stamped, but we still have to file it, which will have more disclosures. So it will become easy for the company, but more disclosures and more transparency will happen. More transparency regarding the period, reason, status, the loan taken, the authorities are involved, the case which is pending, the investigation that is pending, all these disclosures will be done with more details in it, but at the same point of time, removing the topic of stamp duty. It becomes easy for the company and the procedure got reduced, but at the same point of time, it is going to be beneficial for the ROC also to get a better transparent disclosure about it. More detailed disclosures are given. That's the first amendment under Companies Act. I'm not expecting this to be asked as a question, maybe a MCQ can be drafted to the max. Second thing, reporting of fraud. We know this. As an auditor, it is not our responsibility to report fraud, nor it is our responsibility to detect a fraud. Prevention or detection of a fraud is the responsibility of board of directors under director's responsibility statement. But as an auditor, while performing my duties as an auditor, while performing my audit procedures, if I come across a fraud, that fraud must be reported. And if the fraud is involving an amount which is more than equal to 1 crore, I have to report it to the central government. To be more precise, I have to report it to the Ministry of Corporate Affairs, the Secretary of Ministry of Corporate Affairs. But while I'm reporting it, I'll report it in form number ADT, auditors, shortcut for auditors, ADT4. Are you getting this point clear? When you are reporting fraud and reporting to the central government, it will be reported in form number ADT4, auditors, ADT4. Now this ADT4, what used to happen in the past is, this ADT4 was, I'll give you the past law, then I'll give you the amendment here. ADT4 was something which was required to be filed with the Ministry of Corporate Affairs, MCA, on a postal basis alone. It was only postal basis. I'll either send a registered post acknowledgement due or I'll send a speed post. Only two options were given. Once a post has been sent, I'll send an email to the MCA giving confirmation that post was sent. Are you getting this logic clear, Amma? We are not sending it through post or email. It is a fact that it must be sent through post. But once it is sent through post, I'll send an email confirming that post was sent. Now observe the loophole in this. The post might get delayed. The post might be lost or miscarried during the process. There can be chance that somebody might manipulate this during the transit. And because the delay in the process of reporting, can I say there will also be subsequently delay in the process of taking action by the central government? So this doesn't make sense in the given digital market we live in. It is easy for the documents to be sent through electronically. So now the earlier law of post, sending it by post, has been removed and they have converted ADT4 into electronic document. So now the reporting of fraud under form number ADT4 is electronically done with additional information is introduced where we don't have to send it through a post. So earlier post topic has been replaced with the topic of electronically filing ADT4. At the same point of time, new forms for ADT1 to ADT4. Auditors chapters, new forms have been introduced, more details, more transparency, more openness is created. Because auditor is one of that factor of the Companies Act which the shareholders absolutely trust on. We have to create more transparency. More transparency means basically we are expecting them to be having more amount of disclosures. New forms have been introduced there also, 881 to 884. Then the last under Companies Act, we have done this already again under section number 186, loans and investments by a company. If you remember this topic, can a company invest into other companies? Investment into other companies is allowed. It is a power of the board of directors under section number 179, but 186 put a restriction on the number of layers. We can invest up to a maximum of 2 layers. Investing beyond 2 layers is a prohibition. That's a concept where there are exceptions to it. But coming to this amendment here, they have introduced a form called as CRL, Companies Restriction on Number of Layers. What is the full form of CRL? Companies Restriction on the Number of Layers, CRL1. This CRL1 which is revised now, which is going to have disclosures, which is a lot more easier. If you go through practically the form, it is a lot more easy now. Less amount of disclosures, less amount of formalities are there now. So what is this? Disclosure by a company about the number of layers of subsidiaries it is holding and the details about such subsidiaries, and also giving a declaration stating that we are complying with the 2 layers restriction. This has made it simpler reporting for the holding and subsidiary companies. So only thing you have to remember is CRL is the full form. Write it here if possible. Companies restriction on layers. Restriction on layers, CRL1 has been revised to make the disclosure a lot more easy for holding and subsidiary companies. That's your Companies Act amendments which are completed. Now shifting to the IBC, Insolvency Bankruptcy Code, I would say this is important. This can be asked. This can be asked as a 7 marks question also, so listen carefully. We have a couple of amendments in this process, starting with the real estate projects. Now you understand this real estate projects, basically what's happened, assuming I'm a constructor, I'm constructing a huge apartment. For constructing huge apartment, I'll sell the flats even before the construction completes to people I'll technically call them as home buyers. Home buyers. I'll collect money from them and I'll complete the process of construction. For whatsoever reason, if this constructor or the company which is doing this construction process goes into insolvency, for this real estate insolvency process, the IBBI, the Insolvency Bankruptcy Board of India, have notified a separate amendment to make sure that the insolvency process is more suitable and more drafted, curated, tailor-made for real estate businesses, right? So coming to that point, we start with key features of this particular amendment that has happened. The first and the most important point, I feel, moratorium period. If you remember the logic, as soon as the adjudicating authority passes an order for the commencement of CIRP, Corporate Insolvency Resolution Process, they'll also declare something called as moratorium, a calm period within which the company must not be disturbed. Transactions must not be happening other than ordinary course of business. If it is moratorium period and it is going to take 180 days of time for the CIRP process to complete and to come a conclusion whether we are reviving this real estate business or we are going for liquidation, etc. Can I say you are suffering the home buyers? You are not allowing the home buyers to occupy their houses. Forget about the topic that the construction company has done a fraud or construction company has gone into insolvency. Because of the insolvency of construction company, who is suffering? The person who has genuinely paid money for purchasing a house. And coming to Indian market, house is an emotion for every Indian family. So purchasing a house becomes a huge life investment for a home buyer, and you are asking them not to occupy their home even though it is ready. There comes an amendment, states that if the home is ready, the home buyer will have the access to take the possession of it, even during the moratorium period, even during the CRP process of 180 days. Very good amendment, which is for the benefits of the society, not for the law. So one good amendment, home buyers will have the right to obtain possession during the moratorium period, during the CRP logic. Wait a second. Second point, coming to the home buyers and creditors for a real estate business, there will be hundreds, if not thousands of home buyers existing for a single real estate project. If there are, say, hundreds of people who are affected, thousands of people who are affected, there might be a communication gap between the RP, resolution professional, and these home buyers. To have this communication gap filled, we'll appoint a mediator called as facilitator. A person called as facilitator will be appointed for the purpose of communication between the creditors and the RP, resolution professional, and the creditors, including the home buyers, will be communicating with each other with the help of a person called as facilitator. Then, third, this is also very good amendment that has happened. There was a case study. I don't want to go through the details of case study, but what actually happened was a municipal authority has given a piece of land for the purpose of construction. Authority has given a piece of land for the purpose of construction as a lease basis to a real estate entity, for which they'll pay rentals for that period of time. It was somewhere around 70 years, if I'm not wrong. So what happened? This particular entity which was going through this construction went into insolvency slowly. If they went into insolvency, we have started the insolvency process. We initiated the CRP logic, and after initiation of the CRP process, we have constituted something called a COC. If you remember, COC is constituted with all the financial creditors, operational creditors are kept away from the COC. If they're kept away from COC, the municipal authority, the land authorities, the development authorities who has given this land to the real estate company have been classified as operational creditors. Now the decisions under the company for CRP process are being done without the involvement of these land authorities. So there was a court, there was a case running in the court of law, and the court decided and court passed an order giving a judgment that they are operational creditors. That means what happened? The COC's decisions were done without even consulting, without even the land authorities and the municipal authorities being consulted at all. Then comes an amendment stating that these land and urban development authorities which have been a creditor, irrespective of whether they are operational creditor or financial creditors, they will be a part of COC. Basically, force them into the COC even though they are considered as a operational creditors, to make sure that they also have the right to speak and right to make changes or divert or influence the COC meetings there. That's one good thing happened because of the case study that has happened. This law was amended here. Then coming to the RP has an obligation here. Once the CRP process starts, if you remember this correctly, the RP will make an advertisement about the list of claims to be prepared. He'll ask every single creditor to send a claim, and he'll prepare something called as list of claims. Once the list of claims has been prepared, and he'll also understand the business, he'll take over the business from board of directors, he'll understand the books of accounts, he'll have access to books of accounts, he'll speak with officers, employees, take assistance. He'll basically going to be replacing the entire set of board of directors. During this entire process, can I say the RP now understands everything? RP now knows how much amount is pending, how much amount is received, how much project is completed, how much project is pending, how many homes are ready, how many are under construction. He'll have clear details about it. Now this RP has to report about this within 60 days from the commencement of CRP to the RARA authorities. So give me the wordings here. Who is reporting? RP. Reporting it to RARA authorities within 60 days from the commencement of CRP. So what's the expectation here? In this 60 days, you have to complete the entire process of understanding this real estate company and submit it to RARA authority, so that RARA will also be able to apply their laws for the purpose of these real estate businesses. And the last, once a plan has been submitted. Once a plan has been submitted to the adjudicating authority, the adjudicating authority may either approve or disapprove. If at all they have approved it, we will start the revival of company. During this process of revival, the COC can appoint something called as monitoring committee, which will monitor the implementation of this project on a regular basis, making sure that the project's progress is not curtailed, suppressed. It is done on a regular basis on a rightful manner, so that creditors are not affected. These are few amendments. If you run through them keyword basis, first point is home buyers will have possession even during the moratorium period. Second category, the facilitator will be appointed to make sure that communication between the RP and the creditors happens on a regular and smooth basis. Land authorities and development authorities will have a part of COC even though they are classified as operational creditors. RP will have to report to the RARA authorities regarding the project's progress and the understanding of the real estate business within 60 days from the date of commencement of CRP. And the last, once the approval has been received for the implementation process, during the implementation to monitor and make sure that progress is regularly being updated, we'll appoint someone called as monitoring authority. These were the real estate points. This can be drafted as question number. Keep a little more intensity about reading this particular real estate topic. Second category, CP forms have been updated. The new CP forms have been created. CP is basically your corporate person. Corporate person, CP1 to CP5, we have MCQs that can be drafted. There's a lot of numbers into it. So what happened? CP1 to CP5 are multiple different forms which are required to be filed by RP. Now, let me get this clear before we start this logic. RP is appointed by the adjudicating authority. If it is corporate person, it is NCLT. But end of the day, RP is someone who is working under IBBI, IPA, Insolvency Professional Agency, and again indirectly IBBI. So these CP forms are drafted for the purpose of making sure that RP is reporting back to the IBBI on a regular basis. So get the words clear. Who is reporting? RP. Reporting it to whom? IBBI, Insolvency Bankruptcy Board of India. For such reporting, we have created 5 forms, CP1 to CP5. These forms are tackling multiple different concepts coming from the commencement, formation of COC, approvals of COC, final outcome, etc. Multiple concepts have been drafted in each of the forms. All these CP forms, CP1 to CP5, including their sub forms also, CP3A, 3B, etc. All the forms are required to be filed with the IBBI within 10th of the month, 10th of the end of the month in which the event happened. Let's take an example. If the event happened on today, for example, what's the date today? 15th of October. If it happened on 15th of October, this has to be filed with the IBBI on or before 10th of November. By the end of the month in which event has happened, in the next month, I'll file it on 10th of the next month after the event has taken place, except one form under CP3B. CP3B is basically for the approval or disapproval of the adjudicating authority. Once the plan has been submitted to the adjudicating authority, he may either approve or disapprove. Approval or disposal will be given. That will be filed with that decision of adjudicating authority will be filed with the IBBI in form number CP3B. This has to be filed immediately, that is within 7 days from the happening of the event. Give me both the logic somehow. There are a lot of forms which are required to be filed by the RP to the IBBI. All the forms are required to be filed within 10th of the next month in which the event has happened, except form number CP3B. 3B has to be filed within 7 days of the happening of such event. These have to be filed with proper digitally, they must be digitally signed, they have to be correct information submitted on time. But India doesn't work unless you have a knife on their neck. We have put penalties. Penalties stating that if you don't file it on time, we'll impose penalty. A massive penalty of rupees 500 per month. Sir, 500 per month. Now you're expecting this 500 per month to influence, and the RP will be getting scared of it and he'll file it on time. No. I agree, 500 is not a huge amount. 500 per month per form is not a huge amount of late fees that is charged. But at the same point of time, IBBI is not also that dumb to not to understand it. IBBI gave a second point stating that if this delay of filing documents, delay of filing CP forms is continuously done by the RP, he is negligent about it. In extreme cases, I will go to such extent that I'll even take a disciplinary action against such RP. Forget about fees. 500 is nothing for an RP who's basically doing all this procedure. He'll earn lakhs of money here. But 500 is nothing for him as a penalty amount, but they might take a disciplinary action to that extent that his license may also be cancelled. So basically, it is always better to file the documents on time as per the requirements of the CP forms. That's basically your amendment regarding filing of CP forms. Last amendment. This is very simple. Personal guarantor. Might have heard about this Vijay Mallya case where he has given a personal guarantee to the Kingfisher Airlines loans taken. So whenever a company goes into insolvency, the company has to pay money. If not, the personal guarantor is required to pay the money. Even though he has not taken the loan, it's the YouTube, the social media propagates into a manner where Vijay Mallya was actually a victim there. To be honest, what happened? Vijay Mallya did not take a loan. We agree with it. But he has given a personal guarantee for the loan taken by Kingfisher Airlines. He was responsible for that to be paid. But he absconded without any proper payment back to the banks in India. But keeping that aside, coming to this logic, the personal guarantor of an entity or corporation for whom insolvency process started, usually what will happen if the company is not able to recover itself, who will be the person required to pay this money? This personal guarantor. Then the logic states that this personal guarantor is the person who has to submit a repayment plan. to the resolution professional, and resolution professional will basically continue the process, get an approval from the CEO. Same logic, RP. The resolution plan will be prepared by whom this time? Personal guarantor, and it will be given to the RP. RP will get an approval of the COC and he'll go file it with the adjudicating authority for their approval. This is a usual logic. But if no repayment plan has been submitted to the RP from personal guarantor, this will also be intimated to the adjudicating authority by the RP. Two options: either personal guarantor will prepare it and give it to the RP, RP will get approval from the COC and they'll go file it with the adjudicating authority. If not, if the personal guarantor has not prepared, does not submit a repayment plan, then will directly give information to adjudicating authority stating that no plan has been submitted. Then the adjudicating authority will take suitable directions for the company's future transactions for how to deal with this particular personal guarantor as well as the company as such. For defaulting guarantor, how to deal with will be decided by the adjudicating authority, nothing but your NCLT, that's your IBC. If you are feeling that I'm going a little fast, ma'am, at the end of the day, this is an amendment video. I don't want to. It's already 26 minutes. So, fine. I'm actually going very slow. If you feel, you can rewatch it. Not sure whether 26 minutes is a proper time or not. Let's see. Sure. Continue that. SEBI regulations. SEBI regulations have given amendment again for LODR. This is not part of a syllabus, but still given. We have given regarding listed company. So I'm not going to go into the definition of listed company completely here. I've just recently uploaded a clarification on the listed companies amendment exclusion. I'll just give a gist. If you're not comfortable, you can go watch that particular video on our channel. Come back to this a little later. Entity which is not getting its equity shares listed but have got their non-convertible debt securities listed will be excluded from the definition of listed company. They're not considered as a listed company. They have what? Listed non-convertible debentures, but they have not listed their equity shares. Is not considered as a listed company, but if at all the non-convertible debentures are amounting to 1,000 crores or more, observe this carefully. It is more than 1,000 crores of debt the company has accepted. If the company is accepting close to more or equal to 1,000 crores of debt, that is a very huge company. If it is a very huge company which has got its securities listed but not equity shares listed, SEBI states that will apply the LODR topic for it. Even though you are not technically considered as a listed company, but will still amend the regulations for you and will apply rules and regulations. And these rules and regulations are not something new which are already existing for other listed companies. So very quickly run through them. The board composition has been drafted. Such companies must have at least one woman director. We already learned this. At least one woman director for listed companies. Same topic is applicable. Not less than 50% of the directors shall be non-executive directors. What is non-executive? Basically, they are not full-time employees of the company, making sure that the independence of the company is properly maintained at all times. Not less than 50% of the directors are non-executive directors. Coming to the number of directorship, if this is different from Companies Act, as per Companies Act, number of directorships is always 20. But here, an individual can act as director for not more than 7 companies as a board of director, not more than 3 companies as a managing director or executive director, along with him being an independent director. So what are the two categories here? A person, no individual shall act as director for more than 7 or more than 3 as a managing director or executive director. There are certain committees which you are aware of: audit committee, nomination remuneration committee, stakeholders relationship committee, risk management committee. These are the couple of committees which have now been made mandatory for such company which has raised money and got its securities. Which securities? Non-convertible debt securities listed on the recognized stock exchange having a value of more than equal to 1,000 crores but not have listed their equity shares. Continuing the topic, related party transaction, they have to draft a formal policy for the purpose of determining what is materiality of related party transactions, and they have dropped down the limit to 5% of the turnover. If you remember, again guys, I'm warning, this is not Companies Act exactly, this is SEBI regulation slightly deviated from Companies Act. Don't get confused. Companies Act remains the same. Companies Act procedure are still 10% of turnover. All the other logic also as per Companies Act are slightly different. This is only for SEBI regulations. 5% of the turnover. Then second cut, again, every single related party transaction must be prior approval. We already know this. Prior approval from the audit committee as well as the debenture holders. What do you mean by debenture holders exactly here? Debenture trustee will have to approve it before the transactions have been entered. Once a related party transactions have been entered by the company, all such related party transactions must be disclosed by the company on a half yearly basis. On a half yearly basis, we have to come and disclose the results of such transactions on a mandatory basis. And this is a good news for all the company secretaries out there. Secretarial audit is now made obligatory for such companies on a mandatory basis. Must be conducting a secretarial audit. Any which ways it is applicable if you are having huge amount of company, applicable from huge amount of details, huge amount of turnover, paid up share capital, etc. Any which ways it was applicable. Applicable from 1st of April 2025. Minimum board composition, at least one woman director, not less than 50% of them are non-executive directors, at least not more than 7 companies in which you are acting as director, not more than 3 companies in which you are acting as managing director or executive director. Now the committees have become mandatory for you. Related party transaction policy must be drafted about materiality, brought down the limit to 5% of the turnover. The related party transaction must be prior approved from the audit committee and the debenture holders. This related party transaction must be in a prescribed format, accompanied on a half yearly basis of the company. And secretarial audit is now made mandatory. Rest of them are very easy from here on. It will not take much time. Should take hardly 5-10 minutes. We will close it off. Coming to Competition Act. Competition Act, if you remember, the concept called as predatory pricing. Predatory pricing is something where the goods are sold or services are provided, rendered at a price which is lower than the cost, which is killing the market. All the companies which are having huge amount of resources will abuse their dominant position to sell the goods at a predatory pricing, which will drive out all the other companies, all the other competitors from the market, indirectly creating monopoly or reduction in competition. What happened with Jio? This is one of the case studies that have happened. Jio has sold their product services for a price which is lower than cost for a number of years, for the first couple of years, which has indirectly driven all the other small companies out of the market, because Jio was backed with a lot of resources from the Reliance Industries. They had a dominant position in the market which has been misutilized by them for cracking the telecom industry, which has helped India, but at the same point of time it was killing competition in India. So the point is, if you are selling at a price which is lower than the cost, then it is called as predatory pricing, which is considered as abuse of dominant position. Abuse of dominant position is anti-competitive in nature, which is void. This logic is clear, sir, but the question is, people define cost in different manner. Cost can be variable cost can be fixed cost can be total cost can be avoidable cost can be different category of cost can be defined. So the process is, the CCI, the Competition Commission of India, has now made it very clear by defining every single cost. They have defined every single cost for the purpose of understanding what is predatory pricing. So first and foremost, they have defined, come to the second point first, they have defined total cost, variable cost, avoidable cost, long run average incremental cost. They have defined all the type of costs that are possible. Once all the costs have been defined, the CCI takes one as a benchmark. What? The average variable cost. The variable cost was taken as a benchmark for determining whether the product is sold above the cost or below the cost. Variable cost is taken. What is average variable cost? Total variable cost divided by the total output. But this is taken as a main benchmark. But there might be situations where variable cost is not taken. CCI can also use other costs as a measure to determine whether it is predatory pricing or not, but they have to explain why they are using other costs. The first answer, it is that we'll use what? Variable cost. But if not variable cost, we can use other costs also, but we have to explain why we are using the other cost. Then this is just formality. We can take expert advice while we are doing so, and this is applicable on a prospective basis from immediate effect from for the topic of section number 4, abuse of dominant position. I hope this is clear. Competition law, there is only one amendment about predatory pricing. They have defined the cost to make it easy to understand whether it is abusing dominant position or not. So banking sector, there's a couple of amendments on this banking sector topic. There's a very slight amendment about this. Banking sector defines the NBFC topic. What is NBFC? Non-banking financial companies. These non-banking financial companies in the past have been determined, has been classified based on the topic systematically important, which are gonna have an impact on the economy if there's any default made in such NBFCs. They're called as systematically important for the Indian economy, or such which have not raised huge amount of money, even though there's a default, they're not much affecting the Indian economy. They're called as non-systematically important. Their rules and regulations were used to be less. Or otherwise, they are deposit taking. The name itself gives you the topic. They can accept deposits. Or otherwise, non-deposit taking. They cannot accept deposits. So basically, what happened? They were classified either as systematically important or non-systematically important. Deposit taking, not deposit taking. Now they have removed this. They have replaced it. They have replaced the classification now based on their size of the entity, based on the nature of the activity, nature of business they are doing, the risk profile they are working under. They have defined classification in different manners so that better rules and regulations can be drafted. Better rules and regulations will protect the investors and depositors. So one thing you have to remember, the old classifications have been replaced with a new set of classification based on the size, nature and the risk profile involved of NBFC, which will make sure that the understanding of NBFC is a lot more clear. The applicability of betterized rules and regulations are drafted. Better rules and regulations are drafted for effective implementation of NBFC, which will make sure that we will protect the investors and depositors. That's the first amendment that has happened. Second amendment is very, very simple. Cyber crimes. One of the very good and very important topics in the given world, given digital world we are living in. This mobile phone which we have, this mobile phone, we cannot live without a mobile phone for even a couple of days. We are now addicted to mobile phone in a good or a bad manner. Pros and cons are there, but we are somewhat of the way addicted to this mobile phone. Entire information is available on the cyber market. So frauds, crimes happening on the cyber space have now increased. Now coming and linking this with the banking sector, you might have heard, you might have received these messages. A particular bank will not call you for OTPs. Particular bank will not call you for any kind of details about your personal category in the phone call or through the SMS. You should not disclose your OTP personal details to any random person. Your card numbers, your CVV numbers, etc. must not be disclosed. But can I say all these are available on your cyberspace? To make sure that people are not misguided by a banking website, they have changed the website domain of a banking sector. They now should use, effective from 31st of October 2025, within the end of this month, they have to use this domain of .bank.in or .fin.in, financial.in. These are the only two domains which you will find. Until this point of time, you might have found hdfc.co.in, but will not be the domain anymore. To make sure that this is the authentic site of the HDFC or any other bank for that matter, they have to shift to the domain called as .bank.in or .fin.in. These are mandatory to make sure that cyber security is maintained. Right? I hope you are not sleeping by this time. I hope you are still active. If not, go take a small walk, drink some water, have some food or something and come back, sit. This is one of the major important amendment that has happened. What happened? The limits has been increased. The limits have been increased. If the limits are increased, can I say more companies will fall under the MSME sector? More companies can get the benefit of MSME sector. More companies will get the facilitations provided by central government, state government for MSMEs, which is a good move. Which should be done on a regular basis. This is effective from 1st of April 2025. From 1st of April 2025, MSMEs will be defined in a different manner. Very easy to learn. The investment in plant and machinery, earlier it used to be, hope the color is clear. Earlier it used to be 1 crore. It has been increased by 2.5 times. The investment is increased by 2.5 times. Similarly, for small companies categorization, it was 10 crores. Now it is increased to 25 crores, 2.5 times. Or medium, it was 50. It has been increased to 2.5 times. It is 125 now. So what happened? Investment in plant and machinery has been doubled up, more than doubled up. It has been increased to 2.5 times the previous limit. At the same point of time, the annual turnover topic has been increased by twice. It used to be 5 crores, it is now 10. It is 50 crores, it was 50 crores, it is now 100 crores. It was 250 crores, it is now 500. So what are the limits this time, sir? To be called as a micro industry, I should have invested in plant and machinery not more than 2.5 crores or annual turnover of not more than 10 crores. To be called as small enterprise, the investment in plant and machinery shall not be more than 25 crores and the annual turnover shall not be more than 100 crores. Same topic, the investment shall not be more than 125, annual turnover shall not be more than 500. I expect this to be asked. This can be important question. You can take this as one of the very important amendments. The first priority I'll give it to MSME here. Last but not the least, one of the important points again. If not for exam, at least this is practically important. There comes a topic called as I4C. Sorry, I4C. What is I4C is, they basically got lazy while drafting the shortcut for this topic. This is basically the Indian Cybercrime Coordination Center. What is it? Indian Cyber. Basically, if you observe it, 1, 2, 3, 4, 4 C's. I4C. I know it is silly, but that's how they have drafted. Indian Cybercrime Coordination Center. What is it? PMLA, money laundering. One of the very important topics, not only exam perspective, you'll get one question out of it, 7 marks, but also at the same point of time important for a logical purpose, important for the economy. This money laundering must be prevented, prevention of money laundering. But prevention of money laundering is possible only through the financial institutions. Financial institutions will stop the money to be entering into the financial system. If they fail, it is difficult for us to prevent money laundering. If you remember the class we have done more than an hour of example for this, the process of money laundering. We'll have first, we'll place, layer and integrate. The prevention is possible only in case of placement. If you remember the example completely, prevention is possible only in case of placement, which can be done only by financial institutions. Now what happened? They've added the definition of financial institutions to include this I4C, so that this I4C will also be able to coordinate with the enforcement directorate of PMLA to have information which is gone to and fro. I4C, the Indian Cybercrime Coordination Center, will share their financial intelligence to the ED, and ED will also be sharing their information. That is, I4C will receive information from them as well. So there is a communication channel that has been introduced by introducing I4C in the definition of the financial institution. Now, if this has happened, can I say cyber crimes will be linked with PMLA? Now, money laundering can not also be done at the cyberspace also. To make sure that this is done, the coordination to be done properly, we have introduced this definition. Added the definition of I4C into financial institution. So they are formally linked with each other. They can work together. They can work together and track online money trails on a real-time basis. This coordination will make sure that money laundering is a lot more curtailed, which is good for the market, which is good for the industry also. So these are the amendments I have. I have expected it to be done with 10-15 minutes, but I was absolutely wrong. It took us 40-45 minutes to complete the video. But I hope I've given a lot of clarity behind the topic as well as amendment that has happened. I'll share this video in the description, and if at all you are wanting anything else from the CMA final perspective, leave a comment on this video. I'll probably upload videos whatever required for you within the next 1 or 2 weeks itself. And I have already made analysis. Before I close it off, if you have made this far into the video, please do like the video, comment on the video. And one more thing, I've made analysis of the last 5 past papers in syllabus 2022. I'll be releasing a video on that in the near future, maybe a couple of days from here. I'll release that particular video. Make sure that you watch it, the mistakes to be avoided, the priority chapters to be gone through. No selective study, will go through the entire analysis. We'll take time and do proper analysis of CMA final paper number 13. What changes have ICMA AI has brought into their examination pattern? What should be done, what should not be done, what have been students doing, what mistakes to avoid. We'll do all that categorization in the next video. With that being said, I hope you like the video. I hope you'll share this video with all your friends and all your seniors or juniors who are writing exams in December. I hope you enjoyed this session further. Thank you guys. We'll meet you in the next session. Thank you.